David Ramirez, real estate broker. I wanted to share with you a couple of factors if you are considering renting versus buying. Let's pretend this is your first time you're looking to educate yourself. These are the items that make up your payment. The acronym is PITI, and it stands for principal, interest, taxes, and insurance. Start with your principal and interest. Whatever loan you get, there is principal, that is the actual loan, and then there's interest on that. So whatever the interest rates are and whatever you buy, that is what's going to be amortized over the length of your term. Next is your taxes. It's going to vary depending on your tax rate, where you live. The fourth item is your homeowner's insurance. If you happen to be within a mandatory homeowners association, aka HOA, that is an additional factor in your monthly payment. It can be a quarterly payment, it can be semi-annually, and it can even be annually. So your PI, TI, and your HOA will make up your entire payment. When you're looking at a particular property and you're in touch with a lender, you're going to understand what is my total projected payment. When you are renting a property, typically in any market, a tenant is likely going to be paying more than what the actual expenses are. If you're looking to educate yourself on understanding what makes up your monthly payment, we need to understand what your desirable monthly payment would be, what price you would need to purchase within to stay within that monthly budget, and for you to be educated and empowered on what all the expenses you're going to incur so that you can make a good decision whether home ownership or renting is gonna be what's best for you. I would highly suggest you get connected with a reputable lender. Now, if you're just casually looking, Dave, I'm just browsing online, I like personally using Bank Rate Mortgage Calculator, where you can input a price, you can input the interest rate that you think, typically like a suggested rate, which isn't always accurate, but it gets you close enough. If you know how to maneuver that, you can get a good ballpark understanding what a monthly payment could potentially be. So you have a couple of resources. You can use a online mortgage calculator to give you an idea of what costs are. And now hopefully through this video, you can understand that PI, TI, and your HOA will make up your monthly payment, whether you own or if you don't, you likely are still going to be paying that plus a percentage for the property manager or the homeowner. When you weigh the costs, it's worth looking into, because the kicker here is that when you move as a tenant, you're just leaving. Hopefully you get your security deposit back. When you own, there will be expenses with selling, but the appreciation effect will come into play where you will be able to reap the benefit of your investment with making some money should you decide to move. Hopefully this empowers you to continue to educate yourself on doing what's best for you, making an investment, or continuing to wait. We'd be happy to have a high-level call on understanding where you're coming from and what your goals are, and pointing you in the right direction to help you make good decisions.